Top-line securities and Park Electron. I welcome you all in the analyst briefing session of Park Electron. So before we start, I must mention some housekeeping rules. So it would be great if we can continue our discussion in English language as we have some foreign participants as well. And in case of any question, you can use chat option or raise your hand option. So I'll now request management of the Park Electron to please proceed with the session. So over to you, Wasim sir.
Thank you very much. I'll share with you a presentation, briefly run about the Park Electron Limited. So I will share my screen for that. May I know my screen is visible?
Yeah, perfect.
Yeah, sure. So I welcome you on behalf of Park Electron Limited. I am Mohammad Wasim Mir, working as a financial controller in the organization. So I'll briefly take you through about little facts about the Park Electron, and then we can proceed with the rest of the session. So briefly about the history of the sponsor group. It's a Sehgal group which are holding a century-old experience in the business in Pakistan. And they have been into the different industries, and they have been one of the pioneer in the industrialization in the country. They have been into the first they started with the Kohinoor rubber at the largest rubber manufacturing unit way back in the subcontinent. That was pre-partition. And then after partition, the founder of Pakistan requested them to move to the Pakistan, and they set up a textile unit, which was their signature industrial startup in Pakistan. And then as a legacy, for a matter of legacy, the first LC in the state bank, which is the central bank in Pakistan, was opened for this particular group. So that's the kind of the legacy they carry. They have been into the Park Electron itself was founded in 1956, and Sehgal Group obtained the controlling interest in the company in 1978, and then diversified into the home appliances in 1981, and since then it's been going on. Today they have the business interest in consumer goods and power equipment, appliances, household appliances. They have textile and real estate on their portfolio. If we talk a bit about the PEL, on the right top, we have mentioned a brief facts about the PEL, which is a pioneer manufacturing and distributor of electrical goods in Pakistan. And they have we have two working divisions. One is the power segment, and then we have the appliances segment. And in both segments, we have a complete product range, mentioning in power, we have distribution transformers, power transformers, energy meters, switch gears, and we have some contracted business as well. In appliances, we have a full range of refrigerator, air conditioners, deep freezers, ovens, water dispenser, televisions, and washing machines. So group is held by the Mia Naseem Sehgal as the chairman. Mr. Murad Sehgal is working as CEO, and executive director Mr. Yusuf Sehgal are running the show, and they are all seasoned industry professionals. And appliances, you need the way the business model of the appliances is, you need from your manufacturing facility, you have to cover the whole territory of the Pakistan. So for that matter, you need an infrastructure, and also in this segment, the sales are being done through the dealership networks. So we are engaged with 1,500 dealers. We have 23 sale offices in different cities of Pakistan, and we have 500 plus authorized service centers which cater our warranty and after sale services for the customers. So that's the kind of the infrastructure we carry. Talking about the shareholding pattern, Sehgal family holds 53%, that give them the controlling interest. And if you see the rest of the composition, that is more residing with the institutions at the moment, like foreign companies holding 10%, financial institution 10%, pension funds are there, Mudarbas, insurance, and general public. So it appears that at the moment, holding in PEL is the choice of the institutions to serve their vested interests. business segment we are showing for you for information. Again, the product under the both divisions, one is appliances and power division, and this information is also showing the mix, the revenue mix we have for the last reported year, that 50%, 57% of the revenue came from the appliances and 43% from the power division. So this was the brief facts about overall facts about the Park Electron. Then I'll take you through briefly about the appliances overview. So this is briefly explains the landscape of the appliances industry in Pakistan. This slide will take you through that home appliances market size is around 328 billion rupees, which amounts to $1.2 billion as per the latest PECRA research report, which they released in March 2025. So that's the kind of industry that's we have been operating in. The other, like the opportunity building blocks in this segments are that in this country we have the lowest penetration regionally, which creates and always creates an opportunity to grow. So that for that matter, we have shown the market sizes of each major product, and then what penetration levels they carry, and again what market share PEL holds in each category. So like in say in refrigerator, we market size is 1.3 million units per annum, and we PEL holds around 19% market share, and in this category there is a 51% penetration level. So when we see this as a current scenario in the next 5 years, so we believe that this penetration level shall improve, and the other building factors will be then when we see the average life of the products, then there is a replacement cycle as well, and then there are the demographics of the country where urbanization is happening, and so all these factors add up to give it a perpetual demand, creates a perpetual demand, so that overall gives this whole segment a very sustainable look. So and also we can see in the recent past that most of the international brands are moving in, are trying to tap the Pakistan market, being the fifth most populous country in the world. So there are multiple international brands that want to tap this market, but still we are the local player, the largest local player exist in this appliances industry, and all our portfolio and the respective market shares are depicted here. Let's say for air conditioner we have 9%, for washing machine we are 4%, and water dispenser we are sort of market leader, and PEL holds a 25% market share. In this particular slide, you may see the penetration level in washing machine is quite on the higher side, that is 65%. But we believe that 65% is mostly an old technology, like where the manual washing machines have been consumed by the public. And now there is a technological advancement in that particular category, where semi-automatic and automatic washing machines are in demand, and we as PEL have developed this particular facility to where we are supplying the market with the semi-automatic and automatic washing machines. So that 65 penetration is already in existence. They are the users, and they are looking to replace their old technology, so that even the higher penetration level is also an opportunity to grow in this particular category for the company. So that's briefly a landscape that how the market stands and where the PEL holds the market shares, and what we see ourselves in future as well. To tap that market, you need an infrastructure, as I mentioned earlier. So that's the information which gives you a sort of infrastructure we have, the presence we have all across the country to reach and serve the customers. The right part with the map locations gives you the density and the concentration of the population in each province of Pakistan, and how the dealer resides, the population of the dealer resides all across the country. And so accordingly, we have developed the sale offices and service centers and authorized service centers as well, to develop our capacity to serve the customers all across the country. And that are some key numbers, that we have a population of 2,600 dealers all across Pakistan, and we as a PEL are engaged with 1,500 dealers. And for that matter, we have 23 sales offices all across the country based on the geographical hubs, and so as the services centers, which again are there to serve the warranties and the after sales services for the customers. And on top of that, we have also developed some 500 authorized service centers, which will serve the purpose of service center as well. So strategically located nationwide network of dealer service centers enable PEL to reach a wide universe of customer and provide quality after sales services. That's the punchline of this information. Next, I'll carry you through to the future plans or the current business plan we are chasing, like in year 2025. Obviously, we are we are planning a growth in the PEL brand, the products of the PEL brand we have. The next move we have done, we have developed some strategic partnership with the global brands as well, where we have what we have reproduced for you are the material information we have shared with the stock exchanges as well, where we have introduced the Electrolux brand and Panasonic. For Panasonic, we have entered into an agreement to produce the smart TVs, LED TVs in Pakistan, although we were already in agreement with Panasonic, where we have been producing air conditioners for last 5 years. So now for this year, we have added the television as well to our business plan. What we done it for, that we have chased the concept of premiumization, where we believe that we should have a strategic partnership to enter the premium niches in each categories, which can fetch the better pricing and the better margin. And PEL being itself a mid-priced or a mid-ranged brand shall serve the masses. Then the premium niche, which is slightly better priced and better margin, carrying a better margin, where we can have a strategic shake hands with the other global brands. So for that matter, we have struck and we have achieved the agreements with the Electrolux to produce their brand in Pakistan in the categories of refrigerator. At the moment, we are producing refrigerators, air conditioners, water dispensers, and washing machines. And for Panasonic, we were already into the ACs, air conditioners, and now we have moved into the production of the LED TVs as well. So that's on the appliances part, we have some notable moves made in 2025 for your consumption. So that's how our appliances goes. Next, we may give you an overview of the power division. For power division, we have a tagline that we are electrifying Pakistan. So give you just a perspective that what's the value chain of electricity in Pakistan. The first part is the generation, obviously, and then that generated electricity has to be transmitted through our distribution channels to the ultimate consumers, the household and the commercial outlets where this energy shall be consumed. So in all the distribution value chain, PEL has a product range for almost every stage. Like in transmission, we have big power transformers which are installed in the grid stations to control the flow of the electricity, and so obviously that for switch gears of that level are also installed. And then there is a distribution part where distribution transformer installed. These are mostly the pole mounted or the domestic where the domestic supplies are made. And then again the energy meters which are installed at the consumption points to record the consumption made by the consumer. So these are also our products. And again when it comes to the houses and the commercial outlet, we have the appliances which are these outlets are furnished with the home PEL appliances as well. So we are a complete partner in the value chain of that electricity distribution and consumption. So that's the gives you a perspective how that business model is working. On the power product side, and that's the landscape, our domestic landscape, I must mention. We have in which what percent market share we carry for each product, and what market size, the domestic market size of these products are. Of course, in power transformer, we are a market leader by far. We have the 90% market share. In distribution transformer, domestically supplying, we have the 17% market share. In switchgear, it's 25%, and energy meters, it's 18%. And it's this particular division is a very do have a very sustainable outlook, because it's largely based on the government intake, the order intake. The government is a major buyer in this category, and for to maintain and upgrade the system, we believe there is a very consistent order intake shall be in this power division in the coming years. So it's a very sustainable sort of business model we have in the power division. So on top of the domestic landscape, which I have mentioned earlier, that's the opportunity we have developed in the recent past, where we have established our export business. Although we were into the exports earlier as well, but that was with a very smaller or the very not very significant part, but we do have the footprint earlier as well. But recently, what we have tapped is especially tapped the US market, where we established our presence, and we have been confirmed now with certain export orders for the year 2025 as well. As far as you talk about the opportunity in that part, that part carries opportunity, quite a larger opportunity. But what we have to ensure is our share of the pie, and what we have been targeting ourselves for the year 2025 is something like $50 million of sale in the year 2025. And what we can say is that we have secured $44 million orders as well against that plan. That orders have been secured, but that supply chain part has been working out, and we have taken a budget of $50 million in the year 2025, but that execution or the supply chain of resources are being developed, and we are quite confident that we'll achieve that number. Then what we can say that we are technically versatile and strategically curated transformer portfolio, and PEL is quite, because every order coming from abroad is with the different specifications, which is quite different from our domestic supplies. So we are developing our capacities, and we are quite equipping ourselves that we develop that complex and varied requirement to meet the demand of the customer. And notably, we are also securing some orders from the recognized industry leaders, such as we have received an order from Tesla as well. So that's a recognition that our presence is being accepted abroad, and we are gaining dividends on our efforts for that matter. And certainly we do have some competitive advantages over the international competitors, and that's why we have been able to secure that opportunity, and we have made it as a part of the business plan for the year 2025. For that, I can give you a brief little bifurcation of $44 million. That $41 million out of 44 is being secured against distribution transformer, and $3 million for the power transformer at the moment as we are talking of today. This is just a brief footprint we have developed in the field of export. Like I mentioned earlier, we have been into export earlier, where mostly we tapped earlier the markets of Africa and the Middle East. And now with the leap we have taken in USA, that has created a strong presence, and that has made it a significant part our business plan. So we shall carry it from here. So that's the power division. A bit of crunching on the numbers. That's a financial data overview, which will briefly explain you the performance of the company, of the recent performance. Like on the top left block shows you the income statement we have reported for the last closed year, year 2024, where we achieve a 44% growth in the revenue. So has been translated into net sales. Our profitability improved significantly from last year. The reported earning per share improved significantly as compared to 2023, although 2023 had its own facts, which might be known to everyone. You can question about that. Then we have given you the breakup of the gross revenue. Again, also the division wise and the major product wise in the left bottom of the slide. Gross sales shows you that from how we grew and why we dipped in 2023. That's a known fact also, although so whenever there is a dip and we get a normal working in scenario, especially on account of macroeconomics in the country, the PEL brand has rebounded quite significantly from the suppression we faced because of any macroeconomic issues like we can see in the recent past. So that's the strength of the brand we can build or can say that we carry. And for year 25, we just has shown you the projected growth numbers of each product. So you can see, apart from the power transformer, every product we have planned is on the growth, significant growth from the last year. And fact about the power transformers is as I mentioned, is largely dependent on the government buying. So this year government plan is what we are foreseeing at the moment is not as big as was last year. So that's the reason of dip in that category. Otherwise, if that government plan improves, we being the market leader shall capture that opportunity, and that negative growth can also be reversed. On the right top is a trend of last 7 years, if you take into account the projected year sale as well. So it's a 13.6% CAGR for last 7 years of our sale trend. And then again, on the right bottom, we just give you the quantitative numbers. We are still behind in numbers, in quantitative numbers, what we have been in the 2021, but in 23 we have significantly improved our prices and margins because of the fact of that particular year. So that in value are returning quite handsome numbers, but still we believe that we can if we catch up those historical numbers, the result can be even better. So that is a brief, I think, about the PEL with its divisions and its financial performance in recent past. And with that, I will say thank you and take it back to the Shankar if we proceed with the rest of the session. Thank you.
Right, thank you so much, Wasim bhai, for such a delighting presentation, I would say. So before we start, because we have already raised hand from a couple of people and many questions are also in the chat box. So I'll start with the first question. So since we have seen in last couple of months there have been tariff increase from the US on the products from the world, including Pakistan. So how do you see this is going to impact the transformer exports of Park Electron? There are two type of tariff. One is the base tariff, which is 10%, and another one is basically 29%, which is paused for the 3 months. So in both cases, what's your interpretation? will this be borne by your customers? And if in case, in the worst case, this tariff is imposed on Pakistan, will you still be competitive in the American market? So over to you.
At the moment, I would like to answer this question. At the moment, the tariff has been passed on to the customer, which is 10%, and we are right now enjoying the 90 days deferral. After that, 29% or whatever the tariff which has been decided between the government of Pakistan is most likely to be passed on to the customer. If it is to be borne by us, we are bound to increase the price. So in either case, the effect of tariff will not be on us. No.
And in case tariff are imposed, will you still be competitive in the American market? Because
Yeah,
you
I
will
believe
increase the
that the
prices by 30.
increases prices are one option, and also the tariff has been imposed. If you can see the list of the countries where the tariff has been imposed, there are all competitor countries are covered in that. So they have also been taxed, or tariff have been levied on them as well, like Vietnam, China, and you can name the other countries as well. So all the competitors we have, they also been levied with the heavy tariffs. So I think we still believe that despite these heavy tariffs, we still be remain competitive. And other advantage we have on them are the lead times. So that advantage did lie with us still at the moment, because our lead time is the lowest as compared to our competitors. So these two advantage we still carry, I believe.
Okay, perfect. So I'll now request Hamad Ali to unmute yourself and ask your question.
Sami, can you hear me? First of all, thank you. The presentation was very nice. My first question is that in the industrial electronics division, the everything depends upon the price and durability, and in the consumer side, it depends upon loyalty, features, and the price. So if I see the sales quantities, 2021 to compare with 2024 are projected, there is huge dip. What do you think? Is it due to economy, or it is due to the we increase the prices because our overall revenue increase compared to the past?
I think
And
it is
the
mainly because of the COVID. First factor was the COVID. The quantities were dipped down, and secondly, the import restriction took place in Pakistan. So because of the import restriction, we have to import a little quantity of goods. Our capacity has been reduced, the selling capacity. So these are the two major reasons. Otherwise, we are on the growth path for quite many years now.
Yeah,
Yeah,
I'll now
yes,
request Hamza to unmute yourself and proceed with your question.
Gee, thank you. Am I audible?
Yeah,
Yes.
yeah, you
yeah.
can.
Gee, so I had two questions. One, could you please clearly define what you mean by market penetration? And could you please let us know whether your partnership with Electrolux and Panasonic, these partnerships, are they distribution partnerships, or do they also involve production for the brands? Thank you.
Yeah, Hamza, what we mean with the penetration is what the say, for the sake of simplicity, if we have 100 people population in the country, what number of people carry that product, who yeah, or have bought that product? So if in case of refrigerator, if we say 51% out of 100 people, 51 people only have the refrigerator in the country at the moment, and that penetration, the empty part, the 49% is your growth opportunity. So that's what we mean to say with the penetration. So as with the Pakistan having the lowest penetration level in the region, gives it a very sort of lucrative market for the appliances players to have invest in this particular industry. That's why we see that the international brand recently have come into the Pakistan to tap that opportunity, and we as a local player are the largest local player are operating in this industry. And then you say about the Electrolux and the Panasonic. Yes, we are awarded with the license to produce that brand in Pakistan. So we are also producing that brand and selling both these under these agreements. So I hope that answers questions.
think since we have spoken on these two brands, so can you also give comparison of the margin on these both brands? So
Margins,
is
as I
it
told
higher
you,
or
the
lower
both.
than Park Electron phone products?
Yes. So, as I mentioned in my presentation, that these are both brands are of the premium niche. Like premium, when I say is it's a highly priced than the Pell brand, obviously, and also they're supposed to get the better margin than the Pell brand as well.
Okay, I'll now request Halim Sami to unmute yourself and please proceed with your question.
Hello, sir. Salim Sami from Providus Capital. Sir, I had a question regarding the appliances segment. In your last year's briefing, you mentioned that the market size for all the appliances products. So, for example, for refrigerator, you mentioned that the average size was around 1.6 million units, and in your current presentation, you have mentioned that it's around 1.3 million units. So, could you give us a reason for why the estimate has declined? And secondly, the LSM data also showed a decline in their production numbers for the year of 2024, but the Park Electrons numbers mentioned in the annual report, they showed a growth in the numbers. So could you mention what was the reason for this growth while the overall industry has declined?
Well, the decline in the industry was purely, as Manza Saab has mentioned, in the year 2023 was responsible for that. When there was a significant macroeconomic issue in Pakistan, and we all know that Pakistan got stranded with the dollar reserves, and there were some stringent counter measures were taken by the government where businesses were restricted to open the LCs and import from abroad to lower down the dollar bill. And in that, where we being the import-oriented industry, we were heavily suffered. Initially, we believed that we will suffer even more heavily, but that was a tough condition. We were forced to reduce our quantities, and not we were forced, even most of the import-dependent business were forced to reduce their quantities in the market. And there were other also challenges coupled with that, like there was massive devaluation, there was headline inflation was something very touching around 30-40%. So that curtailed and dropped the market size, and from there it has grew, like 1.6 million was dropped around to something 900,000 in that particular year, and from there in 2 years time it has being rebounded to 1.3 million in the last year. So that was the reason the quantities first. We believe that we can catch up our historical numbers, because we did used to sell far higher in numbers in the history. So that's another opportunity we have. We believe we have to grow in the coming days, but certainly that will happen gradually. But what the year 2023 always also did positively, that scarcity in the market, that shortages in the market has helped us to increase the prices. And all these negatives, or negatives in a sense that all these cost increases we have been able to pass on the prices to the customer in the industry, in the market. So that improved our margins quite a lot. So that's why you're seeing that even with the lesser quantities we are producing higher revenues. So these are basically some underlying facts which resulted first dip in the quantitative numbers and then rise in the revenues, and the increased prices are being absorbed in the market. But that's why we have been planning growth in the what we have achieved a 44% growth in the year 24, and we are also planning another 35% growth in the year 2025. So increased market prices are being absorbed in the market. So we are quite going. It's happening quite good for the business, we believe.
Okay, sir. So for the price growth you have mentioned, is there any possibility that you will be increasing prices further in the coming year or so, considering you had already increased it significantly in the last year?
Yeah, we believe the margin is quite adequately covered if any adverse thing happens, because largely the exchange rate are stable at the moment. Interest rates are coming down. inflation is controlled, so we don't see in the near future that so the margins are quite adequately covered with these price points.
Okay, sir. Sir, my last question was regarding the export order. Could you give us an idea of when this amount will be realized? The amount that you had mentioned, around $44 million. It will be realized in CY25, or it will be extended throughout second year?
Manza sir, if you can answer.
Rohan,
The
आप answer
values, yeah,
Please.
I'm going to answer it. The values that we have mentioned in the presentation are of 2025. We are projecting a budget of $50 million, in which we currently have orders in hand of $44 million. So we are going to execute this in the current year.
Okay, sir. Thank you.
Okay, perfect. Since Wasim, you addressed that in 2025 you are expecting a volumetric growth of 29%. So can you just mention what percentage volumetric growth company realized in the first quarter, in the March quarter, on year basis, if you
Well,
have
you
these
see,
numbers?
first quarter is our just a kickstart period where the appliances really kickstart in this. The peak season of the appliances resides in the second quarter, particularly. We grew 19%, although for that matter, in the quarter one
19%.
from the last. Yeah, 19%. But our major business plan, or the peak season of the appliances resides in the second quarter. So in the coming numbers, you will see that rise in the
Okay,
appliances, especially.
perfect.
Yeah.
Perfect. I'll now request Abdul Nasir to please proceed with your questions very quickly.
Assalamualaikum. So Sama from AKD Securities. I would like to ask two questions. Firstly, with the government moving towards tariff rationalization, what impact do you anticipate on your consumer portfolio? Are there any duty discrepancies between the locally manufactured and imported products, especially for your ACs, refrigerators, and washing machines? Raw material discrepancies and CPU discrepancies on the duty. And the second question is, why have the volumes continued to lag despite the local currency remaining stable over the past 2 years? And we just saw the per capita hit highest in the history.
Well, tariff rationalization, we are hearing an idea about that, but I think as long as it's not launched, that will definitely be a respond accordingly. If with that rationalization came, that's a question that whether we increase the prices or absorb in the probably the lot depends on the competition, how the competition reacts. The second part of question, if you can repeat this.
Yeah, the second question was that we have seen the volumes lag despite the local currency remaining stable over the past 2 years. And
yeah,
we
that I
just saw
mentioned
the
that
per
was
capita-
more on the restriction on part of the LCs that is gradually being recovered. You can see the what we have mentioned in the quantitative volumes that we are gradually building it up. Like in air conditioner, in a single year, last year we sold around 60,000 units, and this year we are planning a 100,000 quantity. So in a single year, that leap of 40,000 or something like 40% growth is something we do have are planning on the back of our strength of our brand, and that we can foresee that if these congenial or the friendly or sort of stable policies remained on part of macroeconomics, we can grow it further.
Okay,
So
just to
that was the
continue,
reason. Yeah.
just to continue with the rationalization question, if assuming the ACD and RD are rationalized over the next 5 years, which products do you foresee being the impacted most in the AC or the washing machine or the refrigerators?
I think air conditioner will be more affected because that's a totally imported, the least localization here in Pakistan. The rest of the localization percentage is quite higher as compared to the air conditioner. So air conditioner will be the one which may get affected.
Okay, thanks so much.
Okay, so we'll take few questions from the chat box first, and then we'll move to the remaining raise your hand option individual. So what percentage difference between retail price and retention price of the home appliances? What's the percentage difference between retail price and retention price for the home appliances?
It is, I think, 16 to 18% is the difference between the retail price and the dealer's price.
Yes.
Okay, and I guess you have already mentioned about the domestic market size of power division. It was also mentioned in the presentation. But third question in the same category is what is the gross profit margin on transformer export?
We normally do not share the margin by product. We can generally give you an indication. And the indication is this, that the profitability in exports is better than the local distribution transformers.
Okay, so the general guideline is the profitability is better in exports than the local. Okay, and another question is, can you please state what revenue was realized from the transformer export in this outgoing quarter, in the first quarter of 2025?
In the first quarter, it was quite low, I think something like $3 million. Now, in the second quarter, it is likely to be $8 to $9 million. So it will gradually increase from quarter three to quarter four. And we should be able to cover the $50 million budget which we have drawn this year.
Okay, and can you please share with us about the overview of the global transformer sector pre and post the US tariff, about its demand and supply constraints in the global transformer market?
The global size of the global transformer is quite huge. It's $9.6 billion annually. And much of the share has been taken up by USA, where we have find out the market and we are finding out further customers as well. So there is quite a good chance of growth over there in the distribution transformers market, especially in the power transformer as well.
Can you share your targets for the LED sales?
It is, I think, 10,000 units, Wasim?
15,000 units. 15,000 units.
15,000.
Okay, I'll now request Zubair Ghulam Hussain to please unmute yourself and proceed with your question.
Assalamu alaikum. This is Zubair Ghulam Hussain from Inside Securities. Am I audible?
Yeah.
Yes.
Okay. I just wanted to ask two questions. First is that why you mentioned in your slide that the distribution transformers have a 17% market share in the local market. My question is, who else is competing with you in the domestic market? Because I thought you were the only transformer manufacturer here.
We are the only transformer manufacturer in power transformer, which are deployed in grid station. But in case of distribution transformer, which are deployed on the street, on the pole sides, there are 15 players in it. And this has become a cottage industry in Pakistan. And we are one out of 15. So our share is 17% because of the reason that there are quite many entrants which have entered into this product in the last 5 years. Otherwise, if you go back beyond 5 years, our share was something like 30% out of the 5 or 6 players. At that point of time, Siemens was also working there. Now Siemens has left, and there are many other small players which have joined this market.
So are these other small players also exporting abroad, or you are the sole exporter from Pakistan?
We are the sole exporter from Pakistan because this export exercise takes a long time. You need to develop your product, develop the specification, and find out the customer as well. So these things we have developed over a period of time. We are in export business for the last 10 years, but we have reaped the benefit in this current year. In the last 10 years, our average sales was $3 million. Now we are targeting $50 million. Rohan, if you want to add anything.
Yes, sir,
Okay.
that's properly summarized. Yes.
So one more question I have is basically what is the lead times of the other exporters? You said that one of the competitive advantages that the lead times of other exporters are quite high. From the articles, it seems that the US has maybe contracted to 2 years of capacity from Hitachi, Japan, and other companies globally. Is it if could you explain it in detail as to what your lead times are and what are the lead times of competition that you are competing against with? And is India also a competitor and is exporting? That sums up my question.
What we understand is that our lead time is 8 months versus 18 to 24 months in the West. And India is not participating as such because they are engaged in their domestic demand. Their domestic demand is huge, and they are catering the requirement of the domestic demand in the first instance. Then they come up for the exports. So we have got an opportunity because of the tariff already been imposed on China and further tariff being imposed. So we have an opportunity to grow into this market, and this is the answer.
So you planning to do a JV with any Chinese manufacturer?
Not at the moment.
Okay,
Thank
so sir, do you have any
Thank
further
you.
questions?
Thank you so much.
Okay, so I'll now request Suleiman Mania to please unmute yourself and proceed with your questions.
Assalamu alaikum, sir. Thanks a lot for this presentation. Sir, I have two questions. Firstly, ये जो अभी Electrolux की ads we are looking, we're actually seeing on the television. Is it being done by you or by Electrolux? And the second question which I have is, Dolans obviously has this huge advantage because Archelic has actually helped it improve its quality, and we are seeing a lot of products, good quality products being sold in the market, right? So don't you think having an exposure to a global brand is what is missing in your company at the moment, and what is management? Obviously, I've seen you're trying to do these small JVs with some select companies like Electrolux and the others. But can we see some kind of long-term focused approach where they help you develop the product and improve it? Thank you.
With respect to your first question, the answer is that this ad is developed by our local team, our marketing team, along with our agency, which is doing all this advertisement stuff. And what is the second question?
Sir, second question was that Electrolux, that we've seen Archelic actually.
I got it. You know, we are in the process of trying to find out an appropriate partner to take us to the new heights, but that will take some time. We are in the process, but it will take some time.
Okay, sir. Best of luck.
Thank you.
So I guess we have a follow-up question from Abdul Nasir. So Abdul Nasir, please unmute yourself.
Yeah, if you could tell me if there are any restrictions on the commercial import of ACs or refrigerators for CPUs, and if not, can you tell me the duty structure for these CPUs imports so we can differentiate between the raw material price for CKDs and the CPUs?
Should I answer?
CPUs are taxed around 46% in case of ACs, and whereas in SKD or the CKD parts, we have been importing that are tariffed around 12 to 15% something. So there is quite protected local industry is quite protected till now as against the CBUs. But that the rationalization concept is coming, we have to see what the revised numbers are. But at the moment, that local industry is quite protected against the CBUs.
Okay, so we will take few questions from the chat box. So Wasim, there is a follow-up question on what you said earlier. So if you're estimating that fridges have a 51% penetration, do you mean 51% of the households of Pakistan own a fridge? Or is this 51% of a particular any of your assumption?
No, we take as a household for the matter of present penetration, and that in that penetration there is also one other information, that is the average life of that product, that is mentioned 10 years in case of refrigerator. So for on every 10th year that product is supposed to be replaced as well. So not only the low penetration but also the replacement cycle generates an opportunity to grow in a particular category. So that's how it's this industry is being growing and working.
Okay, so what kind of earnings can be expected in 2025 and 2026?
The gross revenue we have
It will be on the positive side. It will show some improvement, but we can't share with you the exact number of the bottom line.
Perfect. So what is the cost of copper in appliances product and any other important component in your cost contribution?
The most expensive part is the compressor. The copper component in refrigerators is not that. The most expensive part is the compressor and the
Around 8 to
plastics.
10% other than compressor.
Yeah.
In compressor, there is the contents of compressor copper in it, but if you exclude compressor out of it, the copper cost is 8 to 10%. The copper cost is mostly utilized in transformers, where it is something like 25 to 30% of the transformer cost. Copper utilization
Compressor
is
is
more in the
made up of compressor is also made up of copper or something sort of steel structure.
Yeah.
Okay, so in case of let's just say we take the example of refrigerator. So 8 to 10% you said it's a copper cost, and what percentage cost is basically the compressor cost?
Compressor is something like 25 to 30%.
Okay, and what is the localization level of the different products in the appliances and power division?
It varies product to product. For example, refrigerator, we have a value addition of 50% deletion level. And in case of air conditioning, the deletion level is just 10%, 10 to 15%. In case of microwave oven, it is around 10 to 15%. So it is quite low in AC and microwave oven. But in rest of the product like deep freezer, what do you call refrigerators, it is much better.
Can you tell what percentage of imported raw material what is the percentage of your imported raw material in your appliances and transformer business?
It also varies from product to product, but overall, I think something like 70% of the raw material has been imported. And even the 30% which has been imported locally, it is being imported by the traders because the basic raw materials are not made in Pakistan. For example, copper, oil, silicon steel, and things like that.
Okay, and this case is valid for both appliances and transformer business.
Yes.
Okay.
For example, we used to buy copper from local market, but now these days we are importing it from abroad because that is giving us the duty drawback advantage.
Okay, so do you see any improvement in your gross margins in calendar year 2025 and 2026 from the current levels from the first quarter, maybe if I can say?
We are actually targeting to maintain the margin which we have achieved last year because there is a pressure on the prices, especially distribution transformer local. There is a quite much a challenge in terms of pricing. That's why we have reduced the quantity of the distribution transformer local, and we are concentrating more on the exports. So our target is to maintain these margin. I think it will not be likely to improve.
Yeah, but since you are saying the exports are securing higher margins, and in the past briefings you have also mentioned a certain percentage, by which exports margins are higher. So considering that, shouldn't your margins increase going forward
You're
because
right.
the export proportion would be higher?
You're right. That edge will be there, but export is like 14 billion out of the 94 billion rupees. So export is like 15% of the total sales. The export will be fetching better profit, but it will not cover the whole that there will be a quantum increase or margin increase in the profitability or the margins. The other products are affecting because of the increased commodity prices and increased competition.
Okay, so we have one last question on the chat box and one more raised hand. So can you please share the duties structure again? Wasim Saab, if you can answer this.
Well, again, it ranges product to product. Like in ref, it costs us around 5 to 6 in AC. I mentioned it's around 12%, and so on and so forth. So these are the two major products which we it's a quite protected against the CBUs at the moment. So that's what we can share.
Okay, so Mohammed Azim, please unmute yourself and please proceed with your question.
Assalamu alaikum, Mohammed Azim here from Sherman Securities. So I have two questions. My first question was regarding what's your like power, your order book value of power, both export and local. And my next question was regarding the export targets. So what exports are you targeting in the next subsequent years? Thank you.
Rohan?
For next year, we are expecting almost 2 to 3 times increase in the export target. Currently, as I've already told you, that we are expecting a $50 million sales budget this year. So next year, we are hopeful, inshallah, that we will be able to increase it by 2 times or at least or 3 times that we are targeting right now. And the order book of you are asking regarding the local transformers. In local transformer, currently we have a very low order book. As already Mandasab explained to you, that the local players, the small players are trying to enter the market, and due to which we are now focusing on exports market. Though, so currently our order book for distribution transformers in the WAPTA business is quite low. However, the private segment is quite high. We are having approximately 5 to 6 billion worth of orders of distribution and switchgear from private customers, which mainly include residential societies, private houses, and buildings, apartment, etc. So we are focusing on that. They fetch good margins. So that's our main focus right now.
I would like to
Thank
clarify that with respect to the budget for the next year, we are targeting $100 million of sales. We are building up our capacity at more than $100 million, but it depends what would be the timing of the. It may go till mid-June or after the first quarter, the capacity building. So we are targeting a safe target of $100 million for the next year.
Okay, thank you very much.
So you're planning to increase capacity of your power division segment, you are saying,
Distribution
and
transformer, distribution transformer.
what would be the expected capex after the budget if you are announcing it?
Something like 1.5 to 1.8 billion.
1.8 billion rupees.
Yes.
Okay, the last question we'll take from the Fakhar Hussain, and then we'll close this session, sir, because we are already hitting 1 hour mark. Fakhar, please proceed with your question. We are unable to hear, Fakhar.
You are mute.
We still can't hear you. Maybe you can put your question in the chat box. Okay, sir. All right. Thank you so much for your time. It was a very interactive session, and we have already hit 1 hour mark for this presentation. So once again, thank you so much to the management of senior management of Park Electron, and to all the participants for taking out your time and showing interest in the company. All right. Thank you so much, sir,
Thanks
and
to
wish
you
you
as
good
well
luck for the
thanks
next.
to you
Thank
as
you,
well
everyone.
for organizing this meeting.
Thank you.
Thank you, Shankar.